How is everyone doing today? Welcome back to another episode of The Banker Next Door. I am your host, Dr. Joe Berquist. Today I have something a little bit different for everybody. I found a great article in the Wall Street Journal that basically looked at the history of the New York Stock Exchange, and I thought people would find this very interesting. So this article basically runs through Wall Street's humble beginnings in the late 1700s as America as a country was first coming together. And then it runs through the 1800s, the 1900s, and then into the 20th or 21st century in the 2000s. So, and I thought this article did a nice job of giving you kind of a quick summary of the history, but also has some absolutely fantastic pictures in it that I really loved. So this article is titled "A History of the New York Stock Exchange's Ups and Downs. Periodic upheavals have been typically followed by stability and growth." So on the surface, the New York Stock Exchange bears little resemblance to its original form, but one attribute remains unchanged: resilience. Since the market's founding, its history has been marked by a string of traumatic upheavals followed by renewed stability and growth. So it starts here with the casual early years. So Wall Street's beginning as a financial center was inauspicious. In the 1780s, it looked more like a road in a remote village. There were no securities exchanges. Informal transactions occurred periodically on the curbs and in what were called coffee houses. The first securities dealers were auctioneers who primarily traded speculative financial instruments such as lottery tickets, state-issued Revolutionary War bonds, and the rights to revenue that companies had billed out but not yet received. So in the spring of 1792, Wall Street had a formative crisis. The culprit was William Dorr, a former assistant U.S. Treasury Secretary. Dorr borrowed heavily to finance an attempt to corner two bank stocks. The scheme failed and he landed in debtor's prison. But many investors who bought into the mania that sent the bank's share prices soaring were ruined when the stocks crashed. Disturbed by the spectacle, 24 brokers convened at Coors Hotel in Lower Manhattan with the goal of creating a trading network that forbade destabilizing schemes such as Dorr's attempted market corner. They pledged to transact only within their trusted network and at a fixed commission rate. On May 17, 1792, they memorialized the pact near a buttonwood tree at 68 Wall Street. The Buttonwood Agreement marked the birth of the market that would become the NYSE. Now, I just want to say I have a whole book on the incident with William Dorr, and I am definitely going to cover that at some point because it really is an interesting story, and it really led to kind of the first crisis on Wall Street. Another thing I want everyone to keep in mind, that the first central bank in the United States, called the First Bank of the United States, was created and chartered in 1791. So so about a year before the creation, if you will, of the Buttonwood Agreement in 1792. So just some of those kind of historical things to keep in mind. Hamilton was now officially Secretary of the Treasury. George Washington was sworn in as President of the United States, I believe, 1789. Was when he officially went in, when they, after they ratified the Constitution. So again, just a couple of historical things just to kind of keep a note here. And then they have a great picture here. Now, this picture, as we'll see in a second here, this is from like the 1860s, 1870s, somewhere in that time frame, and it's just wild. I mean, just you just see here, obviously carriages going around, horses up and down the street, buildings about 4 stories high, large building down here, church. I'm thinking that's probably the big historic church cathedral in New York there that still stands today, but I'm not 100% sure. But again, just fascinating pictures to look at here, to see like how much New York has changed in just the last 150 years or so. And then obviously the famous painting here of the Buttonwood Agreement, which was painted by Vincent Maragliati in 1949. But then we get into now the tumultuous 1800s. So a more formal exchange took shape in 1817 when brokers drafted a constitution for the New York Stock Exchange, or New York Stock and Exchange Board. The move was timely as a boom and bust in most canal securities ruined many American investors in the 1820s. Stricter criteria for NYSE listed securities than for those traded elsewhere, coupled with the unusually strong performance of securities related to the Erie Canal that were traded on the NYSE, enabled Wall Street to surpass Philadelphia as the nation's financial center in 1830. Now, keep in mind that I know they said that Wall Street, kind of surpassed Philadelphia as the nation's financial center by 1830. I don't know that that was necessarily true. I would say it was closer toward. I'm trying to think what year you had a major financial crisis in. I think it was 1867. I think it was 1867. I think was the big year, but that was really the after that financial crisis is really when you saw the changing of the guard from Philadelphia to New York. I want to say around 1830, New York was still emerging as this major financial center, but the heart of finance in the country was still running through Philadelphia. So the NYSE opened its first permanent location in 1865 at 10 Wall Street. Again, 1865, you begin to see this, how, New York beginning to overtake Philadelphia here. At 10 Wall Street, amid frenzied trading, as rapid industrialization and the development of the West fueled U.S. economic growth, the building was spacious and lavishly decorated, but the trading floor operated like a three-ring circus. Despite the NYSE's relatively strict rules, trading was rife with market manipulation, insider trading, and fraud. So the late 1860s was a particularly crooked period. Unscrupulous stock operators such as Jay Gould and Jim Fisk orchestrated capers to enrich themselves at others' expense. One that stood out was Gould and Fisk's printing of bogus shares of Erie Railroad stock to thwart Cornelius Vanderbilt's attempt to take over the company. Fisk allegedly referred to his activities as an expression of his right to the freedom of the press. In 1869, Gould and Fisk concocted a more elaborate scheme to corner the gold market. Success hinged on Gould's ability to use President Ulysses S. Grant's son-in-law to trick the president into serving as an unknowing accomplice. The gambit failed, and hundreds of investors and 14 brokerage firms were bankrupted in the mayhem. A mob of speculators surrounded Fisk and Gould's offices at the then-standing Grand Opera House in New York's Chelsea neighborhood. Safely shielded by thick marble walls, an unrepentant Fisk lamented to a New York Sun reporter, "A fellow can't have a little innocent fun without everybody raising a halloo and going wild." Unbelievable. Yes, Jay Gould and Jim Fisk were quite the characters. That is for sure. Some other interesting photos here. Again, late 1800s, Wall Street. Great picture of, the kind of the trading floor here. I see, just very interesting. This perhaps is a very interesting picture here. So this was called, I believe this was the quotation room. In 1843, you see kind of the women sitting there and how they would, transmit information around. Obviously, you had ticker tape technology back then, where people had the ticker tapes on their desks, and ticker tape would print out. So again, very, very interesting here. Just kind of the plumbing, if you were, of Wall Street, how it all worked back in the day. So, and then new century, new discipline. So the tone on Wall Street shifted around the turn of the 20th century. Scoundrels like Gould were overshadowed by disciplined financiers, entrepreneurs, and corporate managers. Financiers such as J.P. Morgan and Jacob Schiff enabled America's largest corporations to compete on the global stage, with funding raised on the securities markets. Railroad magnates such as Edward Harriman and James Hill brought desperately needed order to the transcontinental railroads. Entrepreneurs such as John G. Rockefeller and Thomas Edison fueled and electrified the nation. Many corporations whose stock began trading during this time remain in existence. Examples include Union Pacific, General Electric, and U.S. Steel. Trading on the NYSE rose to new heights. During 1875, roughly 54 million shares traded on the NYSE. In 1900, the year's volume had surged to 138 million shares. Not far into the new century, World War I subdued trading, but activity on the market picked up again by the mid-1920s. So much so that in the fall of 1929, stock valuations were completely untethered from fundamentals. The inevitable crash arrived in October 1929, ushering in the Great Depression. One silver lining of the Depression was that public outrage pressured Congress to pass laws to protect investors. The Securities Act of 1933 required securities issuers to provide truthful and comprehensive disclosure of information about the issuers and their securities. The Securities Exchange Act of 1934 outlawed market manipulation and insider trading. The Investment Company Act of 1940 subjected fund managers to federal oversight for the first time. And we also got the creation of the Securities and Exchange Commission, the SEC. Some other great pictures here. You can see here now Wall Street beginning to take its more modern look there with the New York Stock Exchange, a very famous picture. Still looks basically the same today. Traders on the floor. Again, more tape and stuff coming out here, but this looks closer to perhaps 1960s, 1970s. So this was New York Stock Exchange circa 1950 right here. And basically says, and the floor in 1981, and then checking prices on old quotation machines that was common in the 60s and 70s right here. So, and then after Depression and war boom times. So trading slumped during the Depression, but rebounded in the economic boom that followed during World War II. The nation's industrial infrastructure remained intact while cities around the world lay in ruins, giving U.S. companies a competitive advantage. Moreover, entrepreneurs had a vast array of war-related technologies waiting to be commercialized. The aggressive educational campaigns of Merrill Lynch in the late 1940s brought stock ownership to Main Street, and the public's demand for stocks ensured a continuous supply of capital to fund innovation. After many years of strong economic expansion, hard times returned in the 1970s with persistent stagflation battering the financial markets. But Fed Chairman Paul Volcker broke the back of inflation in the early 1980s, unleashing a stock market boom that lasted the rest of the century. In Silicon Valley, venture capitalists flourished with their bold investments in tech companies, secured American leadership in the information age. The rapid growth and breathtaking profitability of these ventures allowed them to quickly make the leap to publicly traded companies. Examples include Microsoft, Oracle, Apple, Amazon, and NVIDIA. Those companies all listed on the electronic NASDAQ stock market, the NYSE's rival, which launched in 1971. And then here we have another obviously classic picture of the stock exchange floor. NASDAQ right here falls, and a little bit more modern trading floor here in the 2000s. So then overcoming 21st century crises. So in the 21st century soon descended into crisis. The birth of the internet fueled rapid speculation in dot-com stocks in the late 1990s, and the bubble burst in 2000. Once again, the markets rebounded only to re-enter dangerous territory with the formation of a real estate bubble. In 2008, many of the largest financial firms in the U.S. discovered they had polluted their balance sheets with toxic mortgage-backed securities. Lehman Brothers, a firm founded in 1850, filed for bankruptcy after its short-term financing evaporated seemingly overnight. Yes, it did. Many other financial stalwarts likely would have followed Lehman into the abyss if not for aggressive government intervention. But the markets have since been as resilient as ever. Tech stocks fueled a bull market for stocks throughout the 2010s. And after the interruption of the pandemic and lockdown started in 2020, markets once again have surged to record levels. It's impossible to know what the future will bring to the stock market, but the past offers clues. From the beginning, there have been occasional manias, panics, and crashes, yet a more promising future keeps emerging from the ruins. History strongly suggests that whatever challenges the market faces today in the years to come, that resilience is likely to persist. And then another classic picture of the New York Stock Exchange. So again, a great little article here, just giving you a quick history of the NASDAQ and of Wall Street for that matter. Some just absolutely classic pictures in this article. Just absolutely loved them. Wanted to share with everybody. So again, I hope, this episode was a little different. I love history. I love studying the history of finance and economics. financial products and banking. And because again, I find a lot of this stuff interesting. A lot of it really plays into the history of the country itself. And I would tell everybody, if everyone has not had a chance on Netflix right now, a couple of great little mini documentaries called Titans. And the first one was basically the rise creation of Hollywood, which interestingly enough played in very much with the also the rise of Wall Street in say like 1900 to 1930, right before the crash and then the Great Depression. So again, very interesting series there on the rise of Hollywood, if you haven't seen it. And then also they just came out with the new one, Titans, the Rise of Wall Street, again, following the history of Wall Street. So if you get a chance, I highly recommend those two documentaries. I'll probably be doing reviews on those two documentaries. Definitely the Rise of Wall Street, I'll definitely be covering that one. But until then, I will wrap up by saying, if you like this episode, please make sure to like, share, and subscribe. That always helps the channel. Remember, we are on Rumble, YouTube, and all major podcast platforms. Please be sure to leave your comments down below, as I always love getting back to everybody. And as always, make sure to check out some of the other content on the channel. I hope everyone has a great day out there. Thank you for listening, and I will see you again real soon.